We're inside of a great experiment. It was an experiment in ratcheting those balance sheets up, and it's an even more dangerous experiment now that they're trying to remove that balance sheet bloat.
Hey friends, welcome back. Thank you so much for tuning in. We very much appreciate you clicking play on this video. I have our friend Lynette Zang back from ITM Trading, and pleased to have you, Lynette. So much to talk about.
It's great to be here as always.
Well, it's great to have you. And, I had Bill Holter on just the other day, and he showed me what I thought was a pretty alarming chart, and then we didn't go far enough into it. I think I turned the corner too quickly. He showed me a chart on interbank lending, which has absolutely crashed to really levels never seen, which to me suggests the big banks are afraid of contagion and they can't trust each other, so they're not lending to each other. What did you make of that chart? Is it as big a concern as I think it is?
Oh, it absolutely is. I mean, during the 2008, and I'll send you this link, but during the 2008 crisis, it absolutely plummeted. But they've been trying to keep it a little bit supported at the levels back in the 80s. And Bill's absolutely right. It's plunged below where it was when it came out in 73. And what I find interesting about that chart, and you're right, it shows that banks don't trust each other. They know they're insolvent. They're not going to get the money back. But that plunge took place, or was last reported, on January 3rd, a full month before the current stock market volatility that sprung up and dropping. I don't think that's a coincidence.
Is it the canary in the coal mine? That's really the question, because, contagion could have happened already. And let's talk about the fact that Deutsche Bank is leveraged to the gills. Is that the first bank to go?
Well, I don't know whether Deutsche Bank will be the first to go, but their leverage ratio remains at 3.8%, which means if the value of their assets falls 3.9%, they are insolvent. But that can really start anywhere. It doesn't have to start at Deutsche Bank, but Deutsche touches every single financial product in every bank. So, and I wouldn't say that this is the canary in the coal mine, because I've really been talking about pattern shifts that I've been witnessing since October. So the pattern shifts, and I saw some that I missed that were earlier in the year. So the pattern shifts really started in 2017. People think that nothing happens until it becomes visible. But you have to look a little below that skin of the markets to see what you're not seeing, but that the insiders know. The banks know that they're not loaning to each other, and the central banks know that they're attempting to support the mortgage markets and keep everything floating. We're inside of a great experiment. It was an experiment in ratcheting those balance sheets up, and it's an even more dangerous experiment now that they're trying to take that, remove that balance sheet bloat.
Well, yeah, it is a great experiment, and I think you're working on something that you're calling the Great Unwind. You mentioned to me just before we started that something very crazy is happening with the mortgage-backed securities. Yeah. You want to talk a little bit about that? Because we know the Fed has taken all of this stuff on their balance sheets. And with interest rates starting to rise, I just don't think it's going to take more than one domino tipping over to send the whole domino chain down.
Exactly right, because it's all about interest rates, and close to 80% of the derivatives out there that we know of, because it's all hidden and that's an opaque market too, are interest rate related. And a lot of them were most likely put in somewhere near zero or lower. So in the mortgage market, what I noticed is if you look at their overall chart, it just looks flat, like they're just running it off, but they're reinvesting the principal and the dividends, which they said they were not going to be doing. And they haven't been doing it in the 10-year Treasury market, which certainly would account for some of the upward move in interest rates. But if you look at the mortgage-backed securities going 5 to 10 years, I don't know if you can see this spike, but I'll send you this link so you can see it. This is huge, and that started in July, when we first looked at it, I think we looked at it in here. Now look what it's done the last two reporting. Zoop, zoop. I mean, it's it's massive. It went from in July, let's see, it was at about, okay, so that's millions, 12 billion to well over 36 billion just since July. So it's tripled. I don't think that's unwinding that part of the balance sheet. That's trying to stabilize it. And I don't know if anybody's looked at the REITs, but the REITs are plummeting too, which is real estate. REITs are real estate investment trust. That's taken physical real estate, turned it into a financial product, and you've got so many mismatches. I mean, I'm sorry, Sean, but this is an accident that is in the process of unfolding.
Now, you know that the Fed has tried to keep interest rates, has kept interest rates artificially low for an unimaginably longer period of time than any of us thought possible. What does this atmosphere of rising interest rates do to all of these investments? And, you know, you mentioned real estate investment trusts. I'm starting to think of these pensions and these pensioners.
Voila.
Yeah, that are going to get, you know, the door's going to close on these people when these things plummet. And pensions can't get paid out anymore. But what does the atmosphere of rising interest rates mean for a country $20 trillion in debt when a new massive budget bill was just signed?
Thank you so much. That means now you got to understand, once you run really perpetual deficits, which we've been doing for a long time, then what you're doing is you're not touching any principal, but you're also not likely paying off all of the interest. And I did a study years ago, I think it was maybe 2007, something like that, where, oh no, it was right after the crisis when we were running the $1 trillion deficit. And I said, well, wait a minute. If we're, and I don't mean only, but if we're only $1 trillion in debt, why are we servicing at that point? I think it was something like 12 or 13 trillion dollars. No, let me back up. I'm sorry. If we're only running a deficit of 1 trillion since 71, and most of that was done during the crisis, why are we paying debt on $13 trillion? So I dug in. I mean, you can get all of this underlying data at the Fred website. So I dug in, and at that time, 70% of the debt that we were servicing was compounding interest. Okay, so now interest has been at 0% for all of this time, which enabled us to accumulate a whole lot more debt without a significant rise in interest payments. So now, with interest rising, and all of that debt went real short term. So it is the new debt that they're building in a rising interest rate environment, but it's also that rolling over debt that they're going to now have to service in a rising interest rate environment. And you want to know what it looks like? Look at Greece. Because if most of your income or all of your income, or not even, if it all goes to paying interest, then you have no money for services. You have no money for teachers. You have no money for police. You have no money for retirement plans that you brought up. And, and that's the other thing. What they've been doing since 2008 is simply transferring risk. They grew all of that debt to paper over it so it didn't look like we were in crisis mode, but all of the central bank experiments have been crisis related to cover it over and transfer the risk. So all of those pension plans, they're heavily weighted in the most expensive stock market in history, which Wall Street's saying, see, it's not so expensive now that it's dropped a couple thousand points. Oh, isn't that great? It's still very expensive. In addition, it isn't so much, I haven't looked at this yet, but I intend to be looking at it for next week. The pension plans were severely underfunded in the most expensive stock market in history, and up until recently, the most expensive bond market in history, and arguably one of the most expensive real estate markets in history, which is a, well, there's derivatives in there too, but that's a lot of what make up those pension plans. How come they were still so severely underfunded?
I've asked the same
Right?
question. I've asked the same question. It makes no sense because if you're running one of these pension funds, all you had to do was really ride an S&P ETF or a Dow ETF, ride a couple of the REITs, diversify into these broader baskets of equities and securities that have done nothing but go up, buy some bonds. That's performed terrifically over the past decade. How in the world are they all still underfunded? And now when the crash comes, it's just going to wipe the whole thing out. I mean, I really don't get
Wow.
it. They're obviously mismanaged. To give
Oh,
them the benefit of the doubt, they're mismanaged. Otherwise, they're crime
right.
cartels, fleecing the people.
It's about fees. I've done work on that and all of the hidden fees, and people don't read the prospectus. They don't read the contracts that they're agreeing to. And so, and if your pension drops dramatically because of stock market crash or a bond market crash or real estate market crash, I mean, you have no alternative. So,
Yeah.
uh, really, I mean, they've been using this just to transfer the risk, and we're all in deep trouble.
Yeah, standing in line as unsecured creditors, just like you will be when there's a
Right.
run on the bank and they take all your cash. All right, so here's
But
what.
be careful because derivatives have senior seniority during bankruptcy, which means that the banks that create and create those derivatives and trade them amongst themselves, they get paid first. So you're not even a senior secured creditor. The derivative can take everything. The derivative owner can take everything before it even comes to you.
All right, I want to ask you something. It's a very, very big picture question, and you don't have to have the
Okay.
right answer. But,
I'll do my
I've
best.
been playing this soundbite from Representative Paul Konjorski, who in 2009 recounted the action in the markets where there was a run on money markets to the tune of $550 billion in just a matter of a couple of hours. Had the Fed not closed the window, or the powers that be, the
Mhm.
Treasury, closed the window, it would have been, I think he said 5-6 trillion, sending the entire global market into a crash. Everything
Right.
would have come down. I think that was the bankers flexing their muscle, reminding Congress who has the power. Because not long after that, Congress signed the TARP bill, and it was a blank check to all these criminal banks. I think the same thing is going to happen again, and I think that last Friday's crash of the Dow of 666 points on the very day the Nunes memo was released, the FISA memo, was sending a message to President Donald Trump, who I think does respect the Constitution and the rule of law, standing in stark contrast to the wicked witch known as Hillary Clinton. So my question is, what can President Trump do? What can one man do to hold off these banksters when they want to crash this market?
I don't think there's anything that anybody can do. They're a lot more powerful. I mean, you look at the financialization of the markets that started to take place in the 80s, and once we started to transition into this debt-based system, and now that transition is complete. That's why everything is so precarious. So, I mean, I would like to say that there's something that has to be done, but this is why we have to have a reset. And that always takes me back to, how they're touting all of the cryptocurrencies and all of this. We're still going to have to reset the debt. We're still going to have to reset and get rid of all of these derivatives. You cannot take all of that garbage into a new system. So I wish I could say something else, but I don't see a reset is inevitable. It has to happen.
Yeah, well, a jubilee, a reset, or swearing off the debt to the criminal Federal Reserve in general. You'll recall that back in, boy, I called it up here. Was it 2015? Iceland jailed some 29 bankers, and their
Hmm.
economy responded extremely positively. And I called up a Forbes article here as I was trying to spark my memory as to what year that was. It says, if Iceland can jail bankers for the crash, then why can't America? Well,
Hmm.
under Hillary Clinton, it certainly wasn't going to happen. But of course, I'll hear people say, well, Trump has stacked his, administration with these same Goldman Sachs bankers. So they'll make the
That's
argument
true.
that the new boss is the same as the old boss. And I'll make the argument that the Clinton Foundation is being investigated by the FBI and DOJ now. So clearly that's not true. That wouldn't be happening if Hillary was in the White House. So I think there's a chance. I mean, maybe that's what he will ultimately need to do. And if Bix Weir is right, and there's some white knights in there, and this is all part part of a road to root a reset, then maybe that's what'll happen. Maybe he'll have to swear off the debt to the Federal Reserve.
Well, I don't think that's a horrible idea. I mean, it's kind of hard to imagine that the US government would do an overt or visible default like that. We certainly should. I mean, if you're an individual, a corporation, or a government, when you've taken on so much debt that you cannot service it, you cannot. Well, then what do you have to do? You have to declare bankruptcy if you're an individual. The US doesn't want to do that, but they should, because that's what the inflation is about. I mean, we don't realize how much they've already defaulted on the debt. It's just they haven't done it visibly because they're trying to use, and they've been using, inflation to cover up that default.
Well, yeah. Well, we're in crazy times, and you know that again, I say it like a broken record, but the 2018 year is the year that the Rothschild Economist magazine predicted back in 1988 would be the year that they would introduce the Phoenix, which would be a world currency. And they said, when it comes, embrace it. So we know what they want us to do. They want to crash. They want to hurt us badly enough that we're willing to accept whatever they give us. And we need to say, hell no, right? I do think that the American people, with the exception of maybe some very hardcore Democrats, the American people collectively have found their voice by electing Trump and not electing Hillary Clinton, whose crimes are legion. And people were sick and tired of it. So I think we found our voice. I mean, can we collectively be strong enough to stand up? Or is geopolitically, is the environment bad enough that won't matter? Because we see here in China, they're finally introducing the oil futures contract, which will mark a seismic shift in Beijing's effort to globalize its currency. And this comes from Foreign Policy here on January 18th. So it's a fresh article here. It says, after years of false starts, a long-awaited Chinese oil futures contract will make its debut on the Shanghai Futures Exchange, likely in late March. The point here is that I think it's going to be traded in their currency, not dollars.
Correct. And that shift has been happening really since 2005. So this is like the culmination of it. But going back to your original question, it's the revolt or the masses seeing the inequality and feeling upset about it, and that, income inequality, power inequality. Yeah, there are a lot more of us than there are of them. And if we stand together, no, they won't be able to get away with it. So that is my hope. And if it's, if it's a Trump supporter that's there to say, no, this is not okay with me. If it's just the normal person on the street, I mean, that's what we have to do. We have to come into community and say no. In China, that's a technocracy that's been shifting the power. But you have to understand too that the Communist Party there, they have party members or cells in every single business in China. So whether it's, if it's a US company or it's a Chinese company, that part doesn't matter. If you have a business, if you're doing business in China, there's a member of the Communist Party in there. So they have a lot of population. We kind of saw what happened in Tiananmen Square. But if people get hungry and hopeless and angry enough, and that's the key, they have to get hungry and hopeless, then we have a chance. Yes, I think we have a chance.
Only if
we have a chance.
Yeah, only if they're educated, because if they're hungry and hopeless enough, they will take whatever fix is offered them. That's what scares me. But all right, well, go ahead.
Well, I was just going to say, but that's really what you're all about. That's what I'm all about, is education and building this community.
Yeah.
And I'm hoping that it's like the 100th monkey syndrome, where you get to a certain tipping point of knowledge, and then even if they don't understand, there's enough people going in that direction to take care of that momentum and push us over.
I 100% agree with you, and I think that tipping point has been reached in many, many different areas. I always like to cite the bovine growth hormone in the milk from Monsanto. Nobody wanted it. And finally, that reached a tipping point where people refused to buy it. So Walmart got rid of it. Then everybody got rid of it. And then bovine growth hormone is no longer being shot into these cows. It's no longer in our milk. We hit a tipping point. We can hit the same tipping point in other avenues and areas. And I think we are. And that's why QAnon and Jerome Corsi's work in interpreting a lot of this QAnon stuff is important, because it's helping people realize how widespread the corruption is, how deep it goes, how so much of it is connected to the CIA and rogue agencies that JFK spoke about when he talked about a ruthless, monolithic conspiracy.
The very word secrecy is repugnant in a free and open society. And we are, as a people, inherently and historically opposed to secret societies, to secret oaths, and to secret proceedings. For we are opposed around the world by a monolithic and ruthless conspiracy
that threatened our republic, and then he lost his life. So I think that we are going to reach a tipping point, and I think that patriots do stand a chance. Now, I want to ask you one final question here. You guys over at ITM Trading are in the business of helping people secure physical silver and gold, and to help people find ways to shelter themselves from economic turmoil, right? Okay.
Yes, exactly.
I want to ask you, though, what you're seeing in the gold and silver markets, because I think maybe I would like to think the ultimate sign of capitulation was just reached when a former regular guest who came on my show frequently for years just announced that he sold his last remaining gold and has gone all in on Bitcoin. More power to him. You know, maybe Bitcoin will go to 100,000 by summer, like Cliff High says, but what would you say to those who are listening that do not believe in going all in on cryptos and do believe in silver and gold despite having been beaten up so much over the past decade?
Well, what I would say, and I'll send you this link, I don't have that graph with me, but we are witnessing a cup or an accumulation formation pattern in the collectible gold coins, in the lower quality collectible gold coins. That is an indication that the smart money has recognized an undervalued circumstance and has very quietly started to accumulate. So what I would say is, if you look at Wall Street's spot gold market that was created specifically for perception management purposes to keep you away from gold and silver, and as painful as it might have been, I mean, I've been accumulating gold since 2002 quite significantly, and I don't really care what it does in the fiat markets because I understand its true functional value. If all you listen to is Wall Street, then what you hear and what you see and what you experience is what they want you to experience, that is in their best interest. You know, so I would say that there is that gold and silver is being widely accumulated by the central banks. It has been since the crisis. Also by the one percenters, and we see that. I'm sure we should see a dip in the ultra rarities because of margin calls on the markets. But to see a cup formation forming in the, really inexpensive collectible coins, I think that's a significant tell. I think that's an absolutely significant tell. But in addition to all of the different trend shifts and pattern shifts that I've been talking about for going on 6 months.
Yeah. Okay. Well, that's interesting inside baseball. Guys, I would just say this, that every thunderstorm begins with a sprinkle, and the storm clouds are gathering. That's what we're seeing, I think, with that interbank lending chart plummeting to levels never seen before. That's the sub 1973 level when they started tracking the thing. And I would just say this, too. If everybody like me is wondering what the next bank is, what's the first bank that'll crash? Is it Morgan Stanley? Is it Deutsche Bank? What will be the next Lehman? We don't know, but I will remind you that Jim Cramer was telling everybody who called these shows.
Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somebody, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over.
Hold, he screamed to his listeners who trusted him. And the point here is that, will you know? Will it all go down in a week? And will anybody tell you? If you want to get some advice, though, on how to protect yourself, Lynette, how do they do that? How do they reach you guys?
Well, they can either email us at services@itmtrading.com, or they can give us a call at 888-696-4653, and we structure a strategy that is customized to every single individual. And whether you have $500 or $5 million, you're treated. We know that somebody that has $500, that $500 is probably more important than the person that has the 5 million to work with. So we treat everybody the way we would want to be treated ourselves. That's our policy here.
All right, very good. I think people pick that up about you. You're very amiable, and people like you because you seem like somebody that we can trust. And I think that you've demonstrated that aptly in our past several interviews. So thank you so much again for your time.
Oh, it's my pleasure, and just everybody be safe out there. These are very crazy times.
Yeah, be safe, take action, stand up, call your legislators, get involved. I don't know, guys. We got to get this witch in jail, I tell you. If they do a perp walk for Hillary Clinton, John Podesta, and Debbie Wasserman Schultz, I will really, really be quite thrilled. I can tell you that much, Lynette.
No, there's going to be a lot of people thrilled if that should happen.
All right. Well, from our lips to God's ears. Guys, thanks so much for tuning in. We very much appreciate your support. Thanks for checking us out at sgtreport.com for real news 24/7. God bless.
Bye-bye.
Bye-bye.
Nobody's going to recognize the financial world we're living in once this unwinds. And it will unwind. Mathematically, it has to.